Good morning, everybody. Oh, didn't get as much sleep as I'd like, but I'm gonna wake up. You're gonna hang out with me, and I'm gonna drink some coffee, and I'm gonna start getting my energy back. But we got PayPal earnings day. I've got the ticker down in the bottom corner, up 5% in pre-market. We did get results out a little bit ago, and it looks like everything is in line and above expectations. Net revenue, it said increased 8% to 7.9 billion, 9% currency neutral. So the currency exchange rates weren't really playing a big part. Transaction margin dollars increased 8% to 3.6 billion. GAAP operating income increased 17% to 1.3. And then non-GAAP increased 24% to 1.5 billion. GAAP operating margin 126 basis points to 16.8%. Non-GAAP margin 231 basis points to 18.5, and then GAAP EPS is 17% to $1.08. Non-GAAP increased 36%. So everything is pretty much in line and looking good. Active accounts decreased by 0.4%. But the rest of it is looking really promising. We got the slide deck here too that we're going to be going through in a little bit. You can see right here. So we'll kind of walk through this step by step as I sip on some coffee. Andres, hey Jesse, Team PayPal, steady $60 in pre-markets, ready to rock. I hope so, man. It's about time, right? We'll see if it lasts. We got to see what's hidden inside of this, but hopefully it's all good. But we will start to read that, and then the conference call is going to be starting, I believe, at 7 o'clock. Might be 6:50 actually. Let me double check. Yeah, no, right at 7. So we've got about 35 minutes until the conference call, so we got some time. We're going to slow roast this. Otherwise, the world has been chaotic. I was posting a bunch about Venezuela. Things are nuts there. If that country, I don't know, man, there's been so many coups against the communist dictatorships there. We used to be one of the richest countries in the world and the third richest in the continent, and it's fallen apart. But I'm really hoping they find their freedom. If it does, man, it's going to be a huge win for democracy around the world. So I'm hoping that goes well for them. I'm going to probably be monitoring that a lot today. Albert, hey, what's up, man? Slim Shady, when will market finally figure out PayPal keeps growing? Hopefully today. I mean, we were up as high as almost $63 a share. We're sitting at 61.29 right now. We'll see, though. This has a history. We're not going to get too excited, right? It has a history of pumping and then dumping. So we're going to make sure that we look at all the lines here and see how things are going. You can see how they were doing previously. So active customer accounts did tick a hair lower. So it's about flat over the last, several quarters. But again, every other metric looked pretty good. What was net income? Last time it was 888 million. Let's see. I don't know if we have that on here. Albert, my only hope for Venezuela is that if they can dethrone Maduro, that our militias and gangs don't take the power by force. Yeah, I'm hoping so too, man. They'll definitely need, if they overthrow Maduro, we need to make sure that there's somebody decent that gets in there to fill the void. Definitely. All right, let's look here. Total revenues. I'm just going to scan down through these lines real fast. Net income loss. So Q4 2024, $1.128 billion a quarter. So these guys are clocking almost $5 billion in free net income a year. And we did see buybacks too. Let me scroll down here. I think it was up here. They returned $1.5 billion to stockholders by repurchasing approximately 24 million shares of common stock. So there's 24 million less shares on the market right now. On a trailing 12-month basis, they returned $5 billion to stockholders by repurchasing approximately 82 million shares of common stock. So these guys, I mean, again, if we look here, shares outstanding, look at this. And this would be different if this was like a dying company. Good morning, Roy. This would be different if this is a dying company that was just buying back shares slowly. This isn't a dying company. This is a company that's seeing growth. It might not be double digit right now, but it's growth. And again, shares outstanding were what? 1.17 billion or something. And now we're down to 1.064. So it's one of those stories where you're seeing increasing cash, you're seeing reductions in debt, you're seeing lowering share counts, you're seeing revenue continue to grow, net income remaining strong, and then Yeah, and margins are growing too. Like everything is looking right with this company. And it's operating at a forward PE of 13.48. Not exactly, fintech PE ratio weightings. So it's gonna be interesting to see how the market finally digests stuff. We're at 6150 right now, so we're up 4.34%. And I haven't looked either. I know that we have earnings with SoFi. I'm just going to take a look down over here in the corner as well. I'm going to try and track both of these since they're of interest to a lot of the people that follow me. SoFi is up 0.68% in pre-market, and this one is really set to rupture. If they do good, if you just look here, let me just adjust this. This is like literally pushing up against resistance and ready to explode higher. So that's going to be interesting. And then Tesla's up 0.5% in pre-market. So lots going on today. Let's just look here. Let's look at the messaging from their presentation deck. I'm going to zoom in here real quick. One sec. Let me just make sure everything's lined up. Zoom in a little bit so it's easier to read. Oh, it's not going to do that. Sometimes my keyboard doesn't line up just perfectly, so I got to do this a little bit different. All right, maybe one more. Yeah, maybe two more. All right, there we go. I think we got the slide deck pretty good now. So second quarter key messages. Strong execution and transformation. They're building a foundation for durable, profitable growth, strong 2Q and 1H results. Branded checkout, Braintree, and Venmo contributing to highest TM growth rate since 2021. That's awesome. Driving consumer momentum with monthly active account growth across PayPal and Venmo. That's good. It'll be interesting. I wish they'd show more of like the analytics between all these different components. Maybe they'll start to as they become more confident with them. Reinvesting cost savings into growth initiatives such as checkout, omnichannel, and ad platform. I like the ad platform especially, but I like the whole concept here. Raising full year 24 guidance for TM, EPS, full free cash flow, and share repurchases. So they've raised guidance on everything, pretty much. Awesome. That's great. Focusing on best-in-class checkout to optimize conversion, Fastlane general availability in the U.S. in August, and expanded partnerships with Meta and DoorDash. That all sounds great. I really like the idea of pushing Fastlane. Rory was talking about that quite a bit. Crossroads, we'll probably look at some of his thoughts. I think they came in pretty close to what he was talking about. Let me just jump over to X real quick. I want to see what some of his notes. Revenue $7.95 billion, GAAP EPS 0.88, non-GAAP 1.04, guidance raised, starting to bake in some first look products into year. Expectations, let's see what he said here. Going into the earnings are very low. Yeah, I agree. It's a setup for a 3x beat, which it looks like we got. Analysts and even PayPal guidance is laughably conservative. I agree. Yeah, this is good. Rory's a good guy to follow if you want to get an idea how all this goes. He goes, annual active account year-over-year growth was negative 1% in Q1, but only active grew by 2% year-over-year. Yeah, so he's very thorough about his analysis here, and I think he's going to be spot on his results. Let me just see what else we got. This is some of the high-low guidance, $7.4 billion. Next quarter, $7.6 billion. And what did we end up achieving here again? And we got 7.9. Yeah, it looks really good. It all looks good. I mean, this is a good quarter for PayPal, guys. SoFi is triple beat and raised guidance, so SoFi did it too, and they're up 1%. So we're gonna see if we just pull up that chart again, right on the edge. I'll zoom that one in too. We might end up flopping between these. They're up 2%. Let me actually switch it to the daily. So they're up near the 200 moving average on the daily and trying to cross above it. Haven't done a good job maintaining that really since February. So this will be a good significant break for SoFi if they can get above that. Yeah, they're up 2% right now. They need to get above the 200 moving average. They haven't really done that. And yep, it looks like it's doing its usual bounce. God, this fiber optic company just sucks. All right, so let's keep reading through here on the next slide deck. And morning to everybody else that's come on. Partnering to unlock value from PayPal's two-sided network at scale. So they're leveraging key assets, trusted global brand, unmatched two-side network at scale, strong position in growing 6 trillion plus e-commerce market, 6 trillion plus, leading branded and guest checkout solutions, powerful data insights and network effects. And then it says to build an open global e-commerce platform enabling commerce. These are like a lot of talking points with partners across the ecosystem driving conversion for merchants of all sizes, moving to omni-channel, expanding TAM, total addressable market for people who don't know. Building differentiated direct response ads platforms. Let's see here. Tens of million merchant accounts, approximately 400 million consumer accounts, and more than 2,400 strategic commerce partners. 1.6 trillion volume, 26 billion transactions. See, their ecosystem is just so incredibly huge and it's been so mismanaged for so many years by the previous leadership that literally just making minor tweaks in the right direction and trying to increase profitability and growth can have significant impact on a company that has done nothing, that has done absolutely nothing. If we switch, let me just do that real quick. I'm going to pull up PayPal's chart on the big screen here for a second, and we'll leave SoFi on the small one. Again, just look at this. We are at levels on PayPal that have not really been seen since September of 2017, right? September of 2017. We are 7 years ago in time for PayPal. And if we go to the yearly chart over here and look at what's happened in 7 years, let's just look. In 2017, they had 1.2 billion shares. So they've cut that down by, it's a like 15, 18%, almost 20% reduction in share count. Look at the revenue segment. The revenue segment, they made what? That's just by that. Let's see. I think we have a better... Let me see, key charts. I think we have a breakdown of revenue here somewhere. Take rate, number of payments. Oh, maybe we don't. Maybe it's just broken by revenue segment here. All right, we'll just have to look at it closer. So 11 point, I'll have to do the math, $13 billion in revenue in 2017. And today we're looking at 29. So that's a significant amount of growth, even though again, it's still a growing company. Total payment volume is up significantly. Look at this payment volume back then, and they need to do a better job with their branding, right? Like Venmo, they're kind of getting raped and pillaged, but they can do that. In the United States, it says 261 billion, I believe, and then internationally is 196. And what do we have now? 971 and 553. Again, they just need to turn on the levers. But otherwise, we're looking at like a $5-6 billion net income year, which would be their best yet. We're looking at strong cash flows. We're looking at transaction margins finally starting to tick up after years of just kind of faltering. Again, a very long time. Look at this. That transaction margins have really been dropping since 2020. So there's just so much that this company is starting to do right. I'm going to refresh and see if we got the latest data in here too. Alejandro, sometimes good. No, it's pretty early though. So we don't have all that data in here right now. But again, this is just a beautiful representation of taking a very large, mismanaged business and starting to apply some direction to it, especially like with Fastlane and the ad business. Like, this is great. All right, let's see what we got here. This looks a little better than what we've seen before. Enhancing customer experiences for our next growth phase. Large enterprises, expanded DoorDash relationship, PSP processing, risk mitigation, branded checkout enhancements, and new ads platform. So they're really starting to integrate basically the whole platform, all these additional services. They're starting to really brand this as an all-in-one package and selling it out to the relationships they have. And DoorDash is no small relationship. Improving branded checkout flows. Initial tests show that redesigned vaulting payment page lifts conversion by 75 to 110 bips. This is great. Again, just figuring out the things you need to tweak, making it better, getting people to utilize the product more, getting merchants to utilize the products and additional services. This is all just really smart. Bringing Fastlane to market. General availability in August for all U.S. merchants on Braintree, PP, CP, and key partners. So they haven't even really pushed this out and we're already seeing results. That's just a beautiful thing. Let me look back over here. I'll put this back on PayPal here for the chart in the bottom corner. Early Fastlane results achieving 80% conversion for returning users versus industry average checkout conversion of 50. So that's a heck of a large conversion rate in comparison. Let's see. So far, or Silas said, but in so many ways, PayPal is like the new Amex. They're the crypto. They are in the crypto dark. It doesn't. Yeah, it doesn't matter. I use the DoorDash relationship, and they rarely credit me the 5% back. What do you mean by that? You don't see it at all, or does it come at one time in a month? Small and medium businesses building S&B momentum. PayPal Complete Payments TPV is 40% plus through the first half of the year. So that's great, man. Consumers enhancing an in-app offers with major brands. I don't know if this is working well yet. That the in-app offers, I've never seen anything I like, but I think the advertising piece is definitely something to focus on, and it takes a while to figure out what works and what doesn't. And I think that they will grind through that and work to make it a profitable part of the business. And it's one where they could really just make a lot of money. Driving Venmo monetization, Venmo debit card and pay with Venmo monthly actives up approximately 30%. That's cool. Meeting consumer demand for in-person payments with expanded omni-channel capabilities. Again, just getting people to use all different aspects of the business. 2024 snapshot revenue. Let's see, results in millions. Revenue 7.8 billion. Transaction margin 3.6. Non-GAAP 1.19. Free cash flow 1.368. This is definitely outperforming a lot of what Crossroads was talking about. Total payment volume 416, 814 in the billions. Account and activity metrics. Sorry, I'm going to drink my coffee a little bit here while I read what Silas is saying. It came for one order only. Oh, okay. I don't know if they do it. Yeah, I don't know. I don't know if they do it enough. Oh, let me refresh this down here. It's still dropping this session. I don't know if they do it like 1 in 7 orders. It was promotion, not honored. Huh. I doubt that will happen all the time. And I'm sorry if that's your experience, but I don't think that that's something that's going to be occurring across the platform over and over again. They want revenue, and so they want to make sure that they're rewarding people for what's going on. So I'm going to have to assume, at least for now, that that's anecdotal and it's not going to be something that's consistent going forward. Let's see, active accounts 429, monthly active accounts 222. Let's see, do we have any of that? Monthly active accounts 220. Let's see, what do we have over here? 220 for monthly active accounts, so 222. So we saw, 3% increase, flat on activity, overall activity for the accounts, but monthly's up. That's a good number. Number of payment transactions is up by 8%. Transactions per active account is up by 11%. TPA, let's see, unbranded card processing is 6%. All right, mix across PayPal's payment platform, branded checkout. Oh, they're actually starting to break it down. They're actually starting to really break down the details. This is great. This is what we want to see. So branded checkout, so a percentage of total, 27%. So that's about the same. Unbranded is about the same as last quarter. So no real change there. Venmo is up 1%. So about what it was in second quarter of 2023. Peer-to-peer X Venmo is 8%. Other merchant services is 10. So this is where we're seeing a decent amount of growth here. And eBay is 2. I mean, eBay's arguably kind of dead. Let's see here. Growing consistently with 5% growth. Yeah, so nothing too crazy there. Let's see, transaction revenue. How are we doing on time, too? I think we got time. 6:43, so we got about 15 minutes. Transaction revenue, 9%, primarily driven by Braintree. I like that. Branded checkout and Venmo. Flat and other value-added services revenue with other interest income offset by lower credit revenue. It makes sense that credit revenue would be lower. 8% driven by interest, customer balances, branded checkout, Braintree, Venmo. Here we go. Guidance. That's what I want to look at. Revenue, mid-single digit growth. So they're saying for let's look here. That was for next quarter. So they're saying that they're going to grow by mid-single digits. So like let's say 5%. Non-GAAP effective tax rate approximately 23%. Non-GAAP EPS high single digit growth, so maybe 8 or 9%. And then GAAP approximately 0.96 to 0.98. Full year 2024 guidance. What do we have? Low to mid single digit growth. Slight increase in non-GAAP with non-transaction operating expenses. Effective tax rate, approximately 22%. No prior change. Prior mid to high single-digit growth, it's low to mid-teens. So non-GAAP is a little bit lower. GAAP EPS, approximately 3.88 to 3.98, approximately 3 point. So prior was 3.65. Again, that just is, we're just seeing incremental growth across all of it, it looks like, along with a reduced share count, which is reducing supply, which we love. Let me see. I've used PayPal extensively since 1999, and this company seems to be hit or miss in many areas. I've spent easily $50,000 through them. Yeah, but you got to remember, too, we can't compare PayPal of old to Alex Chris's, where he's basically, oh, and by the way, we're up almost 6% now at 62.41, so seeing quite an increase. But we can't compare it to Alex Chris's PayPal, of which he's really had a little over a quarter. This is the second quarter, right, to really, with his leadership, to be able to do something with this company. Intuit, if you look at Intuit's chart during his service at that company, it's beautiful. It's just like, what is it? It's just like this. That's the chart, man. And so that's what it did. Every quarter, every year, it just kept going up and up and up. And the low base, and see, the thing is, you said since 1999. That's great. So your experience has been hit or miss since 1999. So that's what people are accustomed to, right? They're accustomed to hit or miss and just this company not performing well. That's awesome. That's what I love. I love low expectations. Again, if we're looking at this chart here, if we're looking at this chart of PayPal, I want to pull it up on the big screen again here. If we're looking at this chart of PayPal, there has been nothing but pain and suffering, even right now with where we are, with this 6% jump that we've done. They're down 80% from where they were. How many days ago? Let's see here. Almost 1,300. So again, and we've kept support all the way through here. Previous resistance going back, over 2 years, and now we've been keeping support. We're above volume. We're launching off of that, getting ready to get above all the volume peaks here, and getting ready to break out of a downward trend line that we couldn't do before. We couldn't do it here recently. We tried to start to step up in May and June and get a little bit of a breakout, and we never got it. But the beautiful thing is, though, this did happen. Let me just adjust this real quick because this is important to look at. So over here, we had our first higher high, our second higher high, even though it was just a wick, and then we trended down and found support on peak volumes, and now we're rolling back up and looking to try and break out again. So if we get above like this red line right here that I have, and let me draw it out a little bit better, and I'll probably keep it close to where it is. If we get above this line and start breaking higher, this company is going to turn around fast as far as the stock price goes, because again, it could double in value. This company could go to like 120 something and have a forward PE that's probably in the 20s, so maybe 30. So if they just show that they have vision in the future, then this is going to look beautiful. Has visual stocks updated? Alejandro posted on X, SoFi financial product number, so PayPal should be there too. Let's take a look. One would think, but maybe he's not focused on PayPal. No, it's not there. Not there yet. Let me see if I'll see if he's got SoFi on here, and I can maybe message him real quick and see if he can pump those numbers out. Yeah, he does have SoFi, and look at this. SoFi's doing all right. The revenue, though, Q2 got a little bit of a hit, right, on revenue, but member growth is there, products is there, Galileo accounts is there, still net income positive, shares outstanding. It looks like we have some pretty decent share dilution. Operating expenses are pretty normal. So it's looking all right. Just at a glance, it's looking all right. And maybe we'll take a look at that one a little bit more later. But yeah, it's looking. But he has that. He doesn't have it though for PayPal. But PayPal's looking good. PayPal's looking good, guys. I'm excited about this. Again. So we're at 62.61. It really hinges on this conference call in 10 minutes. It's up to Alex to show his vision for this company and that he's accomplishing it. And I think he's going to be able to do that. This is going to be a steady eddy for growth, but I think the stock can rebound really well if global liquidity is continuing to pick up. Again, we're up. So we were up 1.2% yesterday, and now we're up 6% in pre-market. And I think it's going to continue to scream higher. I don't want to have one of those Adam Emit moments where Adam's getting crushed by his options, but he's super excited in the beginning that it was just launching. Where was that? I think that was... I don't know. I have to look back at the chart. I think that, it's probably like over here. No, it was this one, right? This is the one that made Adam sad. They were up into the 70s and like pre-market and then just collapsed. And then it was just a freaking mess. So, but I don't think that's going to be one of these moments today. All right, let's read the next slide. Demonstrating the strength of PayPal's global commerce platform. A strong quarter with best transaction margin growth since 2021. Again, that's just beautiful. As branded checkout continues to grow profitably and Braintree contributed growth, innovation across our platform and optimizing consumer and merchant experiences with leading commerce partners such as Meta and DoorDash. I like that they're leaning into all of their relationships and really trying to get it to where their full product suite is in front of these people. Building on Venmo's strong market position with continued engagement and growth and debit card adoption, raising full year 2024 guidance with increased confidence in long-term profitable growth roadmap. And this has been in a market that arguably isn't really been great for transactions, retail, any of that. So imagine what happens if we do actually see, if we're seeing global liquidity picking up, the United States isn't falling apart anytime soon. Imagine what this looks like as rates start to come down if we do see a bounce. And just in just the broader economy. Increasing share repurchase guidance to $6 billion due to stronger free cash flow generation. So we're seeing an increase in the buybacks too. Again, that's just all great. Q&A, bunch of numbers, yada, yada, yada. We won't go too deep into that. That is not me. I do not care about the bean counting. But yeah, so this just looks beautiful. Let's see what X is saying about PayPal. Let's see if anybody's found anything weird in the numbers that they are talking about. Again, up 6% in pre-market. Beautiful. It looks like Crossroads is happy. He put, let's see, let me just zoom in here. He put $1.5 billion in free cash flow, raised guidance, 9% foreign exchange revenue growth. Let's go. Yeah, it looks good, dude. PayPal, double beat. CEO, given the strength of our business, we're raising our 2024 guidance and increasing share repurchases. Again, that's the headline for the day. And it's a good one. It's a good one. Again, people, the first quarter wasn't bad at all. But I think it's one of those things. Here, I'm going to go ahead and push this out. It's one of those things where he had a good first quarter as the leadership of the company, but people don't give a shit. They want to see continued quarter over quarter growth so that you go from being the one where what the post I saw yesterday for PayPal was just a series of people like, let's get ready for the pain. That's it, right? Let's get ready for the pain. Let's get ready for the pain. Let's get ready for the pain. And that's when you know there isn't going to be pain. When everybody's ready for it. That's when you know. So this is perfect. Again, PayPal delivered a strong second quarter and first half, and I'm confident we're on the right track. We're operating from a position of strength, delivering for our customers, and focusing on long-term profitable growth. This guy is going to bring it across. He's going to crush it. I want to show you something real quick. We're going to pull up, we're going to jump from PayPal's chart to Intuit. I want you to see what the previous company's chart looks like, in case you don't already. Oh, I don't even have it. Let me just do this. I'll just cheat. We're not going to put it in. We're just going to, I should add it eventually. So let me just go back a ways here. Now, obviously he's not there anymore, but during his tenure there, look at this chart, guys. Look at this chart of what this man did during his time at PayPal. Look at this. This is it. This is a beautiful chart. This is one of the most beautiful charts on the planet for a stock. In November of 2008, this stock was $20 and it went to $713. This is a beautiful chart. This is a very resilient looking chart. And this is what Alex Chris helped create during his time at Intuit. So to think that he wouldn't do that, we're up 7% now. 7%. What are we at in the bottom? Yeah, I should actually zoom this because it doesn't show up really good. Gotta fix this chart in the bottom corner so that we get ready for this call. And what time is it? We got 5 minutes until the call, guys. But yeah, we're climbing, man. This is looking good. And it's the thing is, it's got so much further to go. Just to where it hits any kind of key resistance like last time where we've been kind of struggling, we've got 17%. And then I think really it's very easy for us to go up to the $83 range. And then again, maybe even towards the 96 in the next several quarters. I'm talking like early 2025 maybe, or before. Again, this thing could launch. If this gets the right narrative behind it and everybody starts talking about it and that starts to feed, that's how I've gotten rich. It's the buying things in the dumps that don't belong there. Companies that are trading where they were 7 years ago. I mean, look at the difference. If we went back just to the all-time high, not that it will, because the market was very bloated at that time. I mean, it could. That's a 400% increase just in the base stock. Not to mention the options that I have. And I'm going to pull up my account here too, because as this comes up, we might take a look at that and see, how much it ends up pumping. Because why not? So I'm going to pull that up on the screen here too. Let me just get logged in, switch over real quick. I am going to change it to dark mode until I go back to the slide deck. Yeah, so let me pull up my account here. So, let's see all that. Better do something else first. Let me fix it. Don't want to show you everything. All right, so let me get in here. Yeah, this looks solid. This looks real solid. Let me get over here. So let's just get to PayPal. We'll focus on that. And we'll pull this up a little bit later. So just yesterday, the options contracts for the January 2026, 2025, not even going anywhere. These could explode, though, because people are gamblers. They buy all this shit, just like crazy things. But it'll take a while for the 140s to really start to move. They're down 91%. And then even these 2026s, a $95 strike for 2026 is down 25%. These options contracts look sick. So this is really underperformed. Don't play lobby music. Okay. All right, so we're going to leave that. That's nice that they do that. So the call hasn't fired up yet. But yeah, these contracts, as the market opens, I don't know if we'll see it in here. As the market opens, these are going to start to scream. Let me get caught up with comments again. Silas said, I do hold PayPal. I just don't know if it can attract younger users. I think it can because, Venmo is PayPal too, right? And almost everybody I know uses Venmo. Silas, I made decent long-term gains in PayPal 3 to 4 years ago. Matthew Ting, last earnings up 8% in pre-mark, then ended up started going. Yeah, I know, but that's just because, again, I just said this a second ago. They had one quarter where they showed that they were doing well, right? They had one quarter, and then they guided stupid low. You got to remember, their guidance last quarter wasn't like it is this quarter. It was, we've basically created guidance that's very, very conservative so that each quarter they can do what they're doing right now, which is beat it. Maybe lobby music is nice. Yeah, fuck that. We're not getting demonetized because it's some shitty fucking elevator music. Come on. Um, but yeah, so this you can't compare that. You can't just say, oh well, last quarter it was up 8% pre-market and then it plummeted. Um, Things are different. It's different this time. People love that, right? Christopher Brown had a feeling we'd crush today. Closed out my position yesterday. Alex Chris is for real, guys. You closed it out yesterday? Well, you shouldn't have done that. This is where the train starts to take off, bro. You're right, though. Alex Chris is for real. When you say closed out position, was that a short position? You got to clarify, bro. But yeah, so I don't know. I'm excited about what's happening right now, guys. I think that this is getting ready to really look good. And I'm going to send a message real quick to Alejandro just to see if we can get this thing updated. All right, I sent that message. So hopefully he can assist here in getting us going. But yeah, I think this is looking sick. I am stoked, honestly, guys. I am really stoked. The call might have started, so let me just go over here. Nope. Nada. All right. I'm loaded up on those 95 2026s. Alex Garcia. Dude, I am too. I got a decent chunk, man. What do I got over here? I got 175,000 in just this one account. I think I have over 200,000 in these January 16th, 2026 calls. Now, don't look at this line right here. Don't look at this one where I lost a bunch of money. Don't look at that one. But I think these are going to just take off, dude. I got to pull up the options contract. Maybe I'll do that after the call. It is sick. Let me go up over here. I'm going to kind of hang out here since the call's supposed to start at 7. And we've got the ticker in the bottom left here. So we'll see how that goes. Let me see. I'm loaded up on 95s. Christopher Brown. I've been buying PayPal stock in the 50s this whole time, ready for launch. Okay, good, dude. Awesome. That's good to hear. Alex Garcia might have around 25,000. I don't get to your level just yet, hopefully. Yeah, that's all right, man. The number is just a number. Again, like years ago, I think it was 2019. Actually, let me show you this real quick before the call starts. So in 2019, for people that don't know, I did not do very well. And so it's one of those things. Oh, I think it's cool moments on Twitter. Maybe. I don't know. I don't know where I put stuff all the time. Let me see here. Cybertruck. Oh, so excited about that. Oh, yeah, right here. So again, this is my low balances, right? This is my low balances. I'm just going to check. Nope, we're not missing anything. This is my low balances. So if you look, you didn't want to be where I was in 2019. 2020, you might be better than I was then. Again, there's just like, this has been a transition over time where I've look at the after. I see some big dumping. Did you see that? Look at that. Boom, down to 58 here and then back up to 62. That is wild. That is wild. So you can see some people that are exiting. It's inevitable. There's these people that are trading all this shit, but it doesn't matter. I think this is a great quarter. So this thing's going up. Whether people are dumping here, I don't know why you would hold this shit for 3.5 years and lose just tons of fucking money and then be dumping here unless you were just playing the market. But whatever. I think that's going to balance out. Definitely somebody with a large orders, though, dumping right here. So very interesting times. Let's see. I'm going to see if the call's getting ready to go here. Nope. Still doing their thing. Let's see if Alejandro was able to update us over here. Not yet. Not yet. We got SoFi up, but we don't have this. And again, it's going to look pretty comparable to what we're looking at right here. Honestly, it's not going to look a lot different. Net income's going to look a little better. Revenue segments is trending up. Shares outstanding is going down again. Like all of this is looking not much different than what it is. So the chart isn't going to matter too much. It's just everything's kind of trending in the right direction. The only thing that really monthly active accounts, again, saw that growth. Active customer accounts is like the flatliner. That's the one where it would be nice to see some increase. But even a total payment volume, what do we got? 259 in the U.S., 144 in international. Let's double check over here. Nope, still not up. And let's just see if we have. Oh, I forgot I got my slide deck. We'll just leave it here. We'll leave it here and chat. What else is going on this morning, guys, while we're waiting for the call to take off, while we're watching this ticker in the bottom corner just go insane and plummet down and then shoot back up? What else is going on in your world? We're up almost 6.5% in pre-market right now. Any other crazy things going on in the investment world that I've missed? Hey, EV James, what's up, dude? Good morning, happy PayPal investors. Yeah, I hope we become real happy. The narrative would be nice to change. Bitcoin, I saw Bitcoin dropping. Yeah, SoFi earnings too. How's SoFi doing? Let's look over here. 0.95%. So not getting that launch that PayPal's getting right now on SoFi. So I'm more interested right now. We've got other people like Tanner from Future Invest that will do a great job on the SoFi earnings call. Look at this. Tesla's up 1% in pre-market. Oh, how do you think the MicroStrategy split will affect the stock price? It does. Stock splits are such a non-event. I don't even care, honestly. I was talking about this a little bit in one of the sessions yesterday, but stock splits used to have a purpose. They don't anymore. Sometimes people pump into them. Again, almost 7% in pre-market for PayPal. But yeah, I don't care much. I don't think it really matters. And it's just, to me, it's noise, Alex. Maytag, good morning, Jesse. Keep up the great work. Everyone hit the likes. He earned it. Thank you, Maytag. I try my best, man. EBJ's, I need coffee this morning. I'm not really functioning. So hopefully during this call, I can really down that. I went to bed at with everything going on in Venezuela, I went to bed at 1 in the morning. And so getting up at 6 was early when you're 46 years old. It's not as much fun. Nice to see PFE up today also. What is PFE even? I don't even know which one it is. Let me see here. Let me see what PFE is. That doesn't ring a bell. Oh, Pfizer. Oh, I don't really deal with the drug companies. But hey, profitability's profitability. We'll take it. Let me see here. What else we got? SoFi still needs another year this year before rally taking off in 2025. Maybe. It could maybe do better before that. Oh, I got to fix this. The connection dropped. We're up 7.5%. 7.5%. Oh, we're getting near that breakout zone, guys. It would be so awesome to establish this breakout over here and turn this into support for the first time. If you look here, we've had the whipsaw up, crash down, and then just down. And then we got up. We couldn't hold it. Down. The real test this time. The real test. We're up, heading to 7.5. The real test is getting above this and turning it into support. If we do that, we'll have had 2 layers of support found, and we'll be ready to again kind of tackle that next level and shoot for a third higher high, which would be amazing. Getting close to 8% now, guys. I'm not going to go woohoo because that hasn't worked out very well for any of us. So we're just going to be like, I hope you break a leg, PayPal. We're going to do that. PayPal up 7. Dude, PayPal's up. It was up 8% a second ago. Ted, chairman, what's up with GBTC pre-market? I don't know. Let me see. Is this thing going yet? I don't think so. Nope, they're dragging their feet today. I don't know why. Let's check out GBTC. Sometimes these things are weird, so I wouldn't necessarily worry too much about pre-market because you have such low volume. Oh, it's just dropping. 11% is pretty steep. It's a pretty steep drop. I think it's just because Bitcoin's getting hit, dude. If we just look at Bitcoin futures, let's see here. Well, I mean, it's not that bad. Boy, GBTC's getting fucked. What is that about? Somebody's liquidating. Somebody's liquidating with GBTC. That's a weird thing. Here, let me pull up the PayPal chart. So yeah, somebody just moving large amounts. Maybe they're exiting out of GBTC and going into something else. I don't know. And they're crashing the price on that. It happens. Adrian, hey, thanks, man, for the starter pack. Appreciate you, dude. Hopefully this call will kick off soon. But hey, we're up 8%. And even boring Alex and his CFO, I can't remember her name. She's good, though. She was the one that everybody was shitting on in the Q1 earnings, or maybe it was the end of Q4. I don't know. But I think she's a visionary. She's good at what she does. And yeah, he's just had a bunch of great hires. I think that these guys are going to do better than people expect. Still waiting. All right. Today's the BTC Mini Trust launch, just like the ETH Mini Trust. Okay, that makes sense then. Adrian's right. That's what it is. That's what it is. So you're getting all that weirdness so it's kind of like ignore it. Just ignore it. It's going to be garbage. It's going to look weird. But yeah, I love the making six figures. Looks like that's kind of the way things closed out yesterday. This isn't really reflecting so much in today's numbers yet. Alejandro wrote on X he's working on PayPal now. All right, thanks, Lussy Picker. I still love that name. All right. Well, tell Alejandro on X, thank you very much. Actually, maybe I'll jump over to X since we're waiting anyway. But yeah, so you got to realize, so like I was saying, like, you're not always, like, you start off with lower numbers, right? I started off with lower numbers. I was actually in the red in 2019 and at a loss for my positioning. And look at what it's turned into. I'm projecting 6.5 million for my low next year. By the way, we're at 8.5% up on PayPal. So this just shows, and right now I'm over 3 million. So I'm like somewhere right around here. So this just shows what can happen in a period of several years, especially if you're an investor in great companies like Bitcoin, PayPal, or I'm sorry, Bitcoin, Tesla, maybe PayPal. Maybe PayPal is the next one. But just like a lot of ones that have really hit for me. I made a bunch of money off of Square. People made a bunch of money listening to me on Hood. People did really well when I was in Meta. Probably not touching that company again. There's been a ton in Palantir. I made $600,000 off of that one. So it's just being patient. It's not easy. It's not easy to be patient, but it's important. E.B. James, the new PayPal senior leadership is the real deal. The company's in good hands. Yeah, exactly, man. It just feels like we're in Alex Chris's hands, and Alex Chris, I was showing the chart of what he did with Intuit. It's sick. It's a sick chart. This man is, and he was like chief tech officer or something there. I don't remember. I'd have to look it up. But like he was a driving force in the technology sector in that business. So why wouldn't he come into this one and do a great job when it was mismanaged? Like Silas was saying, since 1999, it's been hit or miss on this company. So why wouldn't he do a great job? And this isn't going to be the wick that we saw before, guys. This is some slow, steady growth. We're getting near 9% now. Again, starting to hit that line of resistance. This is a beautiful moment. I better zoom out again to make it to where people can see how big the line is. Everybody likes to see big green lines. But, let's see if the call started. What is going on with this call? Why are we so late? Why are we so late, guys? Let's check X, see what else is going on over here. Get on that PayPal train. See what other people are saying. Intuit used to be a turd. Yeah, it was a turd, and for like a decade, all he did was make that price go up. Just straight up. So watch all of it. Amit has the audio on his channel somehow. Really? Q2 2024. Please hold tight. Let me refresh. Oh, here we go.
We started ramping several designs and technology innovations to our branded checkout flows to improve the experience for our customers. For example, we are launching a new super simple vaulted experience for high repeat use merchants. In initial tests, the redesigned vaulting payment page alone shows a conversion lift of 75 to 110 basis points. Experiences like this one are clearly resonating with consumers.
I'm going to boost the volume.
And remember that every point of conversion lift drives significant value for our merchants who are fighting to win every sale. We will be ramping our redesigned branded checkout experiences to all eligible consumers in the US in the coming weeks and months. As the #1 branded mark with the largest network of merchant acceptance, we are a ubiquitous checkout solution. We are continuing to innovate and create high converting experiences on both desktop and mobile and across platforms and devices. We also continue engaging consumers post-purchase with smart receipts, package tracking, push notifications, and more, adding increased value and driving the PayPal engagement flywheel. In fact, we drove almost 20 million app logins from our post-purchase experiences in June alone, growing more than 70% from a year ago. P2P is an essential acquisition and engagement tool for us, and we are returning it to growth. We suffered declines through 2023, but over the past few quarters, we have seen an improvement driven by product enhancements such as new global withdrawal capabilities, better risk decisioning, and more cross-border activity. We will continue to invest in our experiences, pricing, and marketing to drive enhanced awareness and engagement. Turning to Venmo, we are building on the business's strong market position. In the second quarter, Venmo processed more than $73 billion in total payment volume, growing 8% year over year, with monthly actives increasing 5% year over year to nearly 62 million. Both a strong base of peer-to-peer users and adoption of our ecosystem of products are driving this growth. For example, both Venmo Debit Card and Pay with Venmo monthly actives grew approximately 30%.
Nice.
In the second quarter, we launched push provisioning of the Venmo Debit Card to Apple and Google wallets and continued to enable Pay with Venmo with more merchants and partners, including eBay and StubHub, which we expect will continue to fuel this growth. Our recently launched Venmo Teen Accounts is showing encouraging early traction, expanding our addressable market, and helping us build lifelong relationships with customers from an early age. What excites me most about Venmo is that we are only scratching the surface of its potential, starting to drive customer-led, profitable innovation, and we see substantial headroom for growth. Said simply, Venmo is primed for growth. Finally, consumers who love PayPal for online purchases are also telling merchants they want to use PayPal for their offline purchases. We continue to drive the adoption of our card products, and we're making it easier to add PayPal and Venmo branded cards to Apple and Google wallets on mobile devices. We are also looking forward to launching even more ways for consumers to use PayPal anytime, any place, with NFC technology starting in Europe. Expect to see more from us in the coming quarters to enable and incentivize our customers to use PayPal online and in person. Reflecting on the quarter and looking ahead, I want to thank the PayPal team for continuing to work tirelessly as we transform our company and give our customers the best possible experiences.
9.5%, pushing 9.5%.
Over to Jamie.
Oh,
Thanks, Alex.
I love her.
Good morning, everyone.
She's a tough bitch, but I love her.
Moving to slide 6, PayPal delivered strong second quarter results, and we are raising our full year guidance. We're passing through the first half performance and increasing second half growth investments as we build confidence in initiatives across the company. Our goal for 2024 remains the same.
Might have to ring the cowbell.
Set PayPal up for long-term success by prioritizing investments that will deliver durable, profitable growth. As Alex mentioned, while the second quarter produced another improving set of results, change takes time and can sometimes be uneven. The success of our transformation will be measured over quarters and years. We have a lot of work ahead, but the teams are making progress and building on a strong foundation visible in our first half results. Looking at the high-level financial results in the second quarter, revenue increased 8% at spot and 9% on a currency-neutral basis. Transaction margin dollars grew 8% year over year, a more than 300 basis point improvement from the first quarter. Non-GAAP earnings per share were $1.19, representing 36% year-over-year growth, and relative to our prior expectations, higher earnings per share were driven by a combination of factors, including stronger transaction margin dollar growth and interest income. Turning to slide 7, our financial results are a function of the number of customers we have, how engaged they are across our platform, and how frequently they transact with us. Our operating metrics reflect progress on this front. We ended the second quarter with 429 million total active accounts and 222 million monthly active accounts.
This is such a good call,
Total
guys.
active accounts increased by nearly 2 million from the first quarter and included growth in PayPal merchant and consumer accounts in addition to other products. We were encouraged to see sustained total active account growth following a positive inflection in the first quarter. Monthly active accounts continued to show steady progress, up 3% year over year to 222 million, with contributions from both PayPal consumer accounts and Venmo. Transactions per active account, which is a trailing 12-month number, was 60.9 in the second quarter, up 11%. Excluding PSP processing, which is primarily Braintree, transactions per active account grew 6%. Moving to slide 8, total payment volume grew 11% on a spot and currency-neutral basis to $417 billion. U.S. TPV grew 11%. International TPV also grew 11% on a currency-neutral basis, primarily driven by strength in continental Europe and Asia. Looking at the breakdown by product, global branded checkout volumes grew 6% on a currency-neutral basis in the second quarter. This was consistent with our first quarter performance, which increased 6%, excluding a 1-point benefit from the additional leap day. Within branded checkout, we continue to see strength across large enterprise platforms, marketplaces, and international growth. We remain laser-focused on driving deeper adoption of our best-in-class solutions with small and medium businesses and improving our mobile experiences, which are critical, particularly in markets like the U.S. and the U.K. PSP processing volume grew 19% in the quarter, compared to 26% in the first quarter. Importantly, we are beginning to see the benefit of our shift in strategy to drive profitable growth. Our focus on price to value is having an impact, with Braintree now contributing positively to transaction margin dollar growth in a meaningful way. Moving to more financial detail on slide 9, transaction revenue grew 9% on a spot basis to $7.2 billion, driven primarily by Braintree, branded checkout, and Venmo. Other value-added services revenue in the quarter was close to flat at $732 million. Interest on customer balances continued to be a meaningful tailwind to OVAS revenue and contributed approximately 3 points to transaction margin dollar growth in the quarter. Revenue within our credit business declined year over year, but performed in line with expectations. Part of the decline is due to proactive decisions made last year to manage risk and reduce on-balance sheet merchant receivables. We are also seeing ongoing normalization of loss rates within our off-balance sheet U.S. consumer revolving portfolio. Overall, we have taken steps over the last year to actively manage the credit portfolio's exposure and are continuing to position the portfolio to move toward a less capital-intensive business model. Transaction take rate declined by 3 basis points to 1.72%, compared to a 5 basis point decline last quarter. PSP volumes and Venmo benefited transaction take rate, which was offset by faster large enterprise growth within our branded checkout business, foreign exchange fees, and an acceleration in other merchant services, including payouts. Transaction margin dollars increased 8% in the second quarter, compared to a 4% increase in the first quarter. Higher interest on customer balances, branded checkout, Braintree, and Venmo were the largest contributors to year-over-year growth. Branded checkout and Venmo's strong transaction margin results benefited from ongoing efforts to improve and optimize transaction loss performance, as well as some transaction expense favorability. While it's still early, we are encouraged to see initial actions related to price to value, as well as product and ongoing risk enhancements make a positive impact. Relative to last quarter, we saw Braintree return to profitable growth and improvements in the contribution from Venmo, branded checkout, and P2P. Non-transaction related operating expenses declined 1% as we continue to actively manage our cost structure while reinvesting in key growth initiatives. Non-GAAP operating income grew 24% in the quarter to $1.5 billion. Non-GAAP operating margin expanded 230 basis points to 18.5%, benefiting from expense leverage and improvement in transaction margin trends. PayPal generated $1.4 billion in free cash flow in the second quarter, and we completed $1.5 billion in share repurchases, bringing share repurchases over the past 12 months to approximately $5 billion. Finally, we ended the quarter with cash equivalents, and investments of more than $18 billion and debt of just over $12 billion. Moving to guidance on slide 10 for the third quarter and the full year in 2024.
So good.
For the remainder of the year, we continue to guide, assuming a relatively consistent macroeconomic and consumer spending environment. For the third quarter, we expect revenue to grow by mid-single digits and non-GAAP EPS to grow by high single digits. We are raising our guidance for the full year and now expect 2024 non-GAAP EPS to grow in the low to mid-teens. This increase reflects outperformance in the second quarter, as well as a slightly more positive view of the second half of the year, with some strategic reinvestment into growth initiatives. Underpinning our guidance, we now expect transaction margin dollars to increase by a low to mid-single digit percentage for the full year. We have seen steady, profitable growth from our branded checkout business and feel confident in the progress our teams are making. It is encouraging to see the initial impact of our initiatives related to price to value, as well as ongoing product enhancements in areas like P2P. Some of our efforts, particularly on the innovation side, are still early and will take time to scale, but we're encouraged by the initial results and customer response as we begin moving from the test and pilot phases into launch. As we move into the second half of the year, we expect to continue to make progress on these fronts, but there are a few factors to keep in mind. Consistent with the strategy we laid out in prior quarters, our teams continue to prioritize high-quality, profitable growth as we execute against our long-term roadmap. Related to this, we expect lower volume and revenue growth as we move through the second half of the year. This is deliberate, and it shows good progress. By strategically focusing on price to value in areas like large enterprise processing within Braintree, we are driving transaction margin dollar improvements even on a lower volume growth.
Cool.
Offsetting some of these improvements, we expect a much smaller tailwind from growth and interest on customer balances, which represented an approximately 3 percentage point tailwind to transaction margin dollar growth in the first half. We are also planning prudently and forecasting less favorability with some normalization in transaction and credit losses. We continue to expect non-transaction operating expenses to increase slightly, with ongoing efficiency funding our strategic growth investments. Our investment spending will ramp as the year progresses to support our highest priority growth initiatives, the go-to-market of new products, partnerships, and innovation, as well as reinvigorated marketing and brand campaigns for both PayPal and Venmo. These investments are all in support of re-accelerating durable, profitable growth for the company. Given the strong start to the year, we are raising our 2024 free cash flow guidance to approximately $6 billion. We are also increasing our share buyback plan to $6 billion compared to our prior guidance for at least $5 billion. In closing, we've been making good progress throughout the first half of 2024 as we drive significant change across the company. We have clear opportunities to lean in further and ensure we stay on offense in what remains a competitive and dynamic environment. Awesome. We're excited about the path forward and look forward to updating you on our progress along the way.
Good job.
With that, back to you, Alex.
Great job.
Thank you, Jamie. To summarize, PayPal grew profitably again with strength in multiple areas, including branded, unbranded, and Venmo. We are also starting to see traction in several initiatives. Taken together, these results highlight the strength of PayPal's global commerce platform. I'll leave you with one last example. You've heard me talk about our Venmo customers looking for us to provide more money in and money out opportunities. As we are improving opportunities to spend Venmo balance with products like Venmo Debit Card or Pay with Venmo, we are seeing a corresponding improvement in funds being used within the Venmo ecosystem rather than transferred out.
Nice.
This is an example of meeting our customers where they are, solving their needs, and driving monetization and margin improvement in the process. Overall, this was a strong quarter for PayPal, and it gives us the confidence to both increase our growth investments and raise our full-year profit and free cash flow guide. I'm proud of our team and excited about the coming quarters and years for PayPal. Steve, let's go to Q&A.
Thanks, Alex. Before we open the line, I'd ask everyone in the queue to consider your fellow analysts and then ask just one question so we can get to as many people as possible. Sarah, please open the line.
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster.
Oh, I am stoked, guys. I think
your first question comes from the line of Ramsey El-Assal with Barclays. Your line is open.
Hi, thanks so much for taking my question, and great to see all the progress that you're making. Branded volumes maintain the ex-leap year growth rate from last quarter. Can you drill down a bit more into your strategy to drive branded growth acceleration? You mentioned a focus on mobile, vaulting, user interface. What are the most important levers? And then maybe also, did Jamie's comments on lower volume right there at the end of the prepared remarks in the second half apply to both branded and unbranded volumes? Thanks.
Yeah, thanks for the question, Ramsey. We're excited to see the progress that we've made on branded. As you can see, we've got a consistent, loyal customer base that continues to use and love PayPal. What we've been focused on over the last 6 months is really some of the things I've touched on before, the experiences, particularly around mobile. I touched on some of it in the comments, but the teams are working night and day now to improve everything from the vaulted experience, which is essential on mobile. This is, think of, high usage, high repeat usage checkout experience where you actually vault PayPal as your default. We've now improved that experience, and as I mentioned, we're seeing a 75 to 110 basis point lift with our new experience. We're also rolling out a new pay sheet experience overall, which simplifies, gives customers still the choice of whether they're using PayPal Balance or any instrument they want, as well as buy now, pay later, but just simplifying the experience. And we're seeing a nice lift in conversion rate there as well. So big focus on the end-to-end customer experience. We feel like that combined with the ubiquity that we have just in marks across both mobile and web gives us the ability to continue to not only maintain, but where we want to be, which is taking share in the branded experience.
Great. And Ramsey, on the second part of your question about lower volumes in the second half, that primarily relates to Braintree. We are seeing both lapping of larger wins this year, particularly in the second half, and some shifting and normalization in the Braintree revenue profile, just as we enter into and really get into the process of working with our customers around our mission around profitable growth. But on the branded checkout side of things, we expect the second half to be consistent with the first. July is off to a good start. What we've seen in July is very consistent with the first half so far, so we feel pretty good about that.
Nice.
Thanks so much.
Your next question comes from the line of Darrin Peller with Wolfe Research. Your line is open.
Hey guys, thanks, and nice results. Look, especially on the transaction margin side. So just start there and touch on the dynamics around what's contributing to it from mix versus, you talked a lot about pricing for value, which we've heard more and more about in the industry also. So it's good to see, but maybe more direction and color on the contributing forces. And adding on to that, the sustainability of the strength you saw this quarter in growing transaction margin dollars at these rates. Help us understand your expectations there going forward now. Obviously, you updated guidance, but really beyond just the next few months. Thanks, guys.
Yeah, so good morning, Darrin. Thank you. So maybe I'll start with the biggest contributors to transaction margin dollar growth and talk a little bit about the second half there as well. So we were really excited to see the broad-based strength and the acceleration. there's a lot the team has underway, and there's several significant contributors to the growth. First, we talked about in my prepared remarks, interest income on customer balances. That was about 3 points in the first half. But second, and really very strong, was branded checkout. It continues to grow profitably. It's a healthy contributor to transaction margin dollar growth. Braintree, which you mentioned, it is back to contributing to transaction margin dollar growth, which we're really excited about.
Good.
And it's really great to see some progress from our shift and focus there. Venmo continues to benefit not only from the strong consumer, but we're doing a nice job in Venmo too, driving continued growth in monthly actives. And then lastly, transaction loss favorability continued to be favorable in the second quarter as well, which was nice to see. When we think about the second half, there's really a couple of things to think about there. I'd say first is that our first half tailwinds around interest income, will begin to decline. We've just got higher comps in the second half of 23 as rates were coming up in the second half of last year. So that impact on transaction margin dollar growth, the percentage, that'll start to come down. The second is that we saw transaction loss favorability in both the first quarter and the second quarter. It is feeling more durable than we expected, even in the first quarter. Having said that, we're planning for some normalization in the second half. As we get better in transaction loss prevention and detection, so do bad actors, and they continue to work hard to do different things. And the second is we are launching a number of products in the second half, and anytime you launch products, we're just being prudent around how we think about transaction loss to make sure that if we have a few bugs in the process, we're working the kinks out as we go. But the core
so
business
smart.
is solid. We are more positive than we were 3 months ago on Braintree profitability, P2P, on transaction loss. It's still early in our progress, but we're driving significant change.
Love it. She's so good. She knows this
Your
business
next
so well.
question comes from the line of Tien-Tsin Huang with JP Morgan. Your line is open.
Hi, thanks. Good results here. I want to ask about the second half growth in investments. It looks like in your guidance, you're implying a fourth quarter step down in EPS performance there. So should we assume that that's heavy marketing around the holiday? Can you maybe just give a little bit more specifics on what you're marketing exactly and what kind of return you're expecting? Thanks.
Hi, Tien-Tsin. Good morning. I'll take the first part, and then maybe Alex will want to comment on the marketing pieces of it. So in the first half, we've done, I think, a really nice job with expense discipline. We've taken a number of actions to reduce our OpEx profile, while at the same time remixing or prioritizing investment back into engineering, product, and some marketing. Now, we intentionally deferred in the first half some marketing dollars to the second half. So when you look at the second half profile, you're seeing the same underlying core reinvestment in engineering and go-to-market and things like that, but you're also seeing a much bigger ramp in our marketing spend, around marketing and brand campaigns for both PayPal and Venmo, but really also around these product launches, really making sure we put our marketing dollars to work to have that hit the ground running the way we need to. So in the second half, when you think about the EPS guide side of it, more than half of that 4Q pressure is the ramping of those growth investments. The other side, I'll just mention this quickly while we're on the topic, is that we've got a higher tax rate in the second half than we had in the first half. And so that, particularly on a comparative basis to last year, is what's impacting some of the EPS profile.
Yeah, and just to pile on and dig a little bit deeper, this is very deliberate. The first half of the year, we needed to invest in innovation.
All right. Sorry about that. My internet is getting fixed today. One sec. Should be coming back. I don't know.
And it's time to
There we go.
To tell the world about it, and we're excited to ramp up some of our go-to-market spend in sort of exciting and engaging ways.
Your next question comes from the line of Harshita Rawat with Bernstein. Your line is open.
Hi, good morning. Alex, I want to ask about Europe. Historically, PayPal has grown in the region despite not investing enough. How are you thinking about Europe among PayPal's international markets? Looks like the company has a very strong local presence. and the regulatory environment is now more favorable with respect to NFC access on iPhones? Thank you.
Yeah, I think it's a great question, and it's one of the things that, you know, we may overlook sometimes when we just think about PayPal. We are a global company, and the way customers use us, whether it be cross-border, whether it be access to merchants all over the world, is truly a global phenomenon. And we've invested heavily over the years in ensuring that we are compliant in everywhere that we want to be in over 200 different markets. You know, as we think about our strategy, as I've laid out in the past, to make sure that PayPal is available everywhere for every purchase, every time, that includes being able to be available in an omni-channel solution, whether it's e-commerce or whether it's in person. And with some of the changes coming, particularly in Europe around NFC, that opens up the opportunity for us, and we will be prepared shortly to be able to play in that space. So, you know, it's exciting to see our growth. Yeah, I'll hit one more example. Our buy now, pay later growth that we continue to see. 60% of that volume comes from outside of the U.S. So we're bringing the entire ecosystem of what PayPal brings to the global stage, and excited to continue to invest there.
Your next question comes from the line of Colin Sebastian with Baird. Your line is open.
Great, thanks, and good morning to everybody. Was curious on the SMB initiatives, in particular the strategy to drive more adoption of branded checkout, how important Fastlane is to that initiative, and then also if you think advertising can be, you know, ultimately a lever for that side of the business.
I really have hope for advertising.
Thank you.
And Fastlane's great.
It's a great question. And SMB, as I've you know said since I got here, I think is an untapped opportunity for us. So let's just pull back and talk about what SMBs really need, right? Small businesses they're fighting for every customer. They need to be able to find customers. They need to be able to engage with customers, convert them, and then re-engage with them. And really what they're looking for is an end-to-end platform and an end-to-end solution to help them. It is very difficult for a small business to piece together 17 different solutions. They just don't have the bandwidth, the people, and the time to be able to make that happen.
Very smart focus.
With PPCP, we now have put together the most powerful single platform for them to be able to run their business in a full stack manner. So with PPCP, you now get branded experiences with the best branded experiences. You get access to the best guest checkout conversion with Fastlane. You get unbranded processing so that you can ensure that you can process anywhere around the world. You get every mark. You get buy now, pay later. You get access to our working capital. And then, as you mentioned, now that we start to roll out our ads platform, you get the ability to drive new customers. You also get the ability to re-engage with customers in a delightful way. So package tracking, smart receipts, the ability to be able to remarket to customers even after they've purchased. All of this is in one place with one partner. And so, you know, look, we're in early days right now. PPCP really is just rolling out. We're excited about the progress and the growth, but there's a lot more to play here. Live in 30 markets and through 40 partner channels. But I think we're just getting started. This is going to play out over the next few years.
Your next question comes from the line of Sanjay Sakhrani with KBW. Your line is open.
Good morning. It's nice to hear about the accelerated general availability of Fastlane. Maybe you could talk about what it means from a revenue contribution standpoint, and if not this year, maybe we could just talk about what that how we should think about the revenue contribution. Would it be through more engagement? And then maybe just secondly, if you could just talk about the volume trends. It seemed like U.S. was pretty stable, international dropped off. Maybe just a little bit more color there would be helpful. Thanks.
Yeah, let me start with Fastlane. So just as a reminder for everyone, Fastlane is really tackling the 60% of checkout that is guest checkout. We've got a unique experience because of the volume of our two-sided network and the consumers that we see coming in, where we're able to dramatically change the conversion rate for repeat users. So 80% conversion rate versus a traditional roughly 50% on a repeat user. Our goal is to capture and help all merchants for all guest checkouts. So the way we built Fastlane is this really is a platform that can be processor agnostic. And we want to be able to help every consumer come through and have a delightful guest checkout experience, as well as enable actually our ability to capture them through a Fastlane by PayPal experience and bring them into a branded experience as well. So there's a flywheel effect. In terms of rollout, we're rolling this out now. We've got a developer day situated in a few weeks from this time in August. We're going GA now in August as well, and so we'll be ramping up as many customers as we can. We've not talked about and disclosed pricing on this, so I'm not going to get into that at this point, but know that this is our ability to monetize, not just guest checkout that we process through Braintree, but really for us, the total addressable market is the entire guest checkout experience across the board.
Yeah, and on the second part of your question around the U.S. and international environments, as I mentioned before, we see the U.S. environment being very consistent right now with what we've seen over the first half. International is a real strength for us, and we did have a shift, down a bit in the international area on TPV this quarter. But when you look at that, what that really is, it's almost solely related to lapping some large Braintree wins last year. Otherwise, very healthy.
Your next question comes from the line of Dan Dolev with Mizuho. Your line is open.
Hey guys, good morning. Thank you for letting me ask a question. Great results. Wanted to ask you, Alex, a little bit about the competitive positioning regarding, Apple Pay. Obviously, really strong branded checkout. There has been some worries in the past. Can you maybe contextualize a little bit where we are and what you're doing to beat them?
Apple
Thank
Pay.
Yeah, thanks, Dan. Great question. So let me set some context. So first, we play in a massive multi-trillion-dollar market, and it's not a zero-sum game. So we expect competitors. We've had competitors come in since we launched, over a decade ago. We went from one button to now there's lots of different buttons and branded experiences, and we'll expect that to continue. Let me though set the context of the reality of today and then how we think about the future. So the reality today, we are the number one branded experience across all platforms and devices. If we narrow down into desktop web, which is still 40 to 50% of all checkout, we see no degradation in our share over the past 4 years. So let me say that again. We've held share despite competition. Second, if we look across browsers, there's actually no difference in our selection rate across different browsers. So certain buttons moving from one platform to the other just isn't material to us. So that's where we are today. So let's focus around our ability to continue to improve and make this a better experience for our consumers going forward. So for merchants, they're looking for an end-to-end solution. They want to get customers, they want to convert customers, and they want to engage and have a return experience with customers. As we talked about, we now have the best branded experience. We're continuing to improve that. We have Fastlane, so we have the best checkout experience. And we've rolled out ads and continuing to invest in our profile. So we're helping merchants end to end. On a consumer side, they're looking for ubiquity, flexibility, and a rewarding experience. We are the most ubiquitous. We have 80% acceptance rate in the developed world with a large and growing customer base. And from a flexibility standpoint, they want to be able to pay everywhere with any way that they want to pay, and we're able to provide that. So if you pull back, I'm just excited that we are in a strong position of being the most complete platform and two-sided global network, driving the highest value and benefit to our consumers and our merchants.
Your next question comes from the line of Timothy Chiodo with UBS Financial. Your line is open.
Great. Thanks a lot for taking the question. I wanted to drill into branded checkout a little bit with the 6% growth. Maybe you could talk a little bit about the relative levels of growth, US versus international. Granted, you did call out the strength in international with continental Europe and Asia. And then also on the relative levels of transaction margin, given that there are some differences in transaction expense levels and also potentially merchant size mix. Would appreciate those. Thanks.
Yeah, so on a relative level of growth, US and international, both continue to be strong contributors for us. There's obviously different market mixes and different merchant mixes as you look at those growth profiles. In the US, large enterprises continues to be an area of strength for us. And I would say in the small business area, we continue to remix that portfolio as we move to PPCP and off of legacy platforms and really move to both a direct and a partner strategy there. When you look at the international side of things, branded checkout is very, very strong in several European, both countries and corridors. UK continues to be pressured, but I would say outside of that, we've got real strength in other countries such as Germany and just real bright spots in Europe as well. So I'd say it's fairly balanced across the globe when you look at it. I'm trying to look at the second part of your question here. Transaction expense. When you look at transaction expense, it is impacted by funding mix, product mix, geo mix, all of that stuff. Funding mix relatively stable. The biggest driver of our shift in TE right now has been Braintree, and that continues to be what is happening there. We're always looking at ways to continuously improve our transaction expense profile and work with different partners to move the needle on that, and we continue to have different benefits, different quarters, just in terms of how that rolls through, none of which was particularly material, but we had a little bit of that too.
Your next question comes from the line of Jason Kupferberg with Bank of America. Your line is open.
Good morning, guys. Thanks. I just wanted to ask a follow-up question on the full year guide for the transaction profit dollar growth. Obviously, you're ticking that up here. It does imply the deceleration in the second half that you mentioned around float comps, et cetera. What I'm trying to get a sense of, has your full year outlook for transaction profit dollar growth from the core branded and Braintree businesses changed? Just to kind of isolate the delta here in the guidance.
Yeah, I would say generally we're seeing a stronger branded baseline, and we're having increasing confidence in the slope of our Braintree profitability efforts. That's what I would say on those two.
Your next question comes from the line of James Faucette with Morgan Stanley. Your line is open.
Great, thank you so much. Want to circle back to Fastlane and obviously a lot of interest and excitement in terms of its launch timing, et cetera. And I think you've made it pretty clear is that this will be kind of a gradual opportunity that'll build on it and addressing a big market. How should we think about like what your key to-dos are as we go through the rest of this year and into next year? And I'm wondering if any of Fastlane with the launch timing is now built into the guidance, as well as any other new initiatives that may have been added into guidance for the rest of the year. Thanks.
Yeah, let me start with the last part. We've really not built any Fastlane upside into guidance, and part of that is because of our go-to-market is going to be very focused on just getting adoption, not around monetizing in this half of the year. Now, to be clear, we're pricing in the contracts that we're signing with customers, and so pricing is built in. And as I said before, the TAM is every guest checkout. That's what our focus is. Sweet. But it's not built into the second half of the year. In terms of our key to-dos, we've really created and worked hard during this beta period to create a seamless experience so that developers and merchants can get on board as fast as possible. And so, for someone using us now, it's really a 2 to 4 week experience to get onto the Fastlane code and enable that to roll out. So we need to get it on as many platforms as we can so that small businesses in particular can just one click a button and turn it on for the holidays. We're working with many of our large enterprises who want access to this before the holidays as well. But again, look, the reality is we've got a lot of merchants around the world, and it's going to take time for them to be able to put this into their roadmap. So that's why we want to set expectations that this is going to take quarters and years to get everyone on board. But the beauty of Fastlane is it's a network effect. More customers coming through it. We're already seeing best-in-class conversion rates, the more customers that come through it, the more profiles that we start to capture, and the better the conversion rates should become. So we want to get started as fast as possible, get as many merchants through this holiday season as we can, and then build from there.
Sarah, let's make time for one last question, please.
Thank you. Our last question comes from the line of Andrew Schmidt with Citi. Your line is open.
Hey, Alex and Jamie. Thanks for squeezing me in here. I wanted to double click just on the Braintree trends. Obviously, good progress in terms of transaction margin dollar growth. Maybe we could talk a little bit more about what's driving that. Clearly, more disciplined, lapping of large contracts. And then, as we look to the back half and beyond, I hear you on the slope that's kind of built into the outlook. But from what you've seen so far, how does it inform your confidence in terms of building on the progress that you've seen so far in transaction margin dollar growth as we go into the back half in the subsequent years? Thanks a lot.
So good morning, Andrew. Thank you. So first, let's just talk through the Braintree growth and what's really driving that. We set out this year to really reorient the team with Braintree around profitable growth. And as we've done that, we've had just a number of conversations with customers, both around contract renewal, but also just around our holistic relationship and, really getting into understanding how we partner, what the margin structure is, how we provide value-added services, just the overall value-to-value exchange that we've got. And honestly, they've been really positive conversations and just on a total relationship basis sort of thing. As we've looked at that, there are certain situations where, as we've gotten into the discussion, we're willing to accept a lower share of revenue in exchange for a higher margin contract. There's other situations where, as we work with our customers, we're able to sell in value-added services in ways that we just haven't done before. So it's lots of different levers, in that process. But what we're excited about is we're really starting to see good traction on that. It's intentional. We've set out to do this, and it's a really good thing for the business. And I think as you look at the second half, what we saw play out in the second quarter, I expect to continue. We saw, some of the volume growth normalize a bit, but we saw more positive transaction margin dollar growth. And it's really good to see that tangible progress play out. And I think it'll continue to play out over time. It may be a little bit uneven and nonlinear, but, that trend of a little bit more normalization into the business, but improving margin profiles is something we fully expect to continue.
Alex, I think you have time for any final comments you might have.
Yeah, thank you all today, and thanks, Steve. Just to close the call, company is energized. We're proud of what we've accomplished. Just to again sort of set the context of where we are. We're really 6 months in. We've got a new leadership team. We're getting stronger every day. We've returned the company to transaction margin growth. We've returned the company to consumer user growth. We've significantly improved profitability of Braintree, and we're accelerating Venmo. And so I just feel really proud that we are stronger today than we were 6 months ago, and we will be stronger 6 months from now than we are today. And we're executing against our game plan. This will be measured in quarters and years. This will be a long game, but 6 months in, we are on the right trajectory. So thank you all for today, and see you next quarter.
Awesome.
Thank you. This concludes today's conference. Thank you for participating. You may now disconnect.
All right, guys. I think that was a great quarter. I love that they're taking this massive company. Let me actually just switch the slide deck here because I want to look at something real quick again. I love that they're taking this huge company and they're focusing on the customer experience with the mobile app, that they're focused on merchant adoption and getting it to where they're using all these other components within the company. Because you have to remember, when you have tens of millions of merchant accounts, 400 million consumer accounts approximately, and then more than 2,400 strategic commerce partnerships, like the fact that they're focused on margins and just building out and tweaking all these areas. I love Jamie, their CFO. I think she seems to understand the business and all the minutia that go in with it. Again, if we just look at this, let me just pull this up. If we look at this PayPal chart, So right now, we're like, if we look back, if we go on the daily here and jump back a ways, August, so basically a year, we've got all of the volume underneath of us for the last year. And I think over the course of the coming weeks, we're easily going to test up back towards the 70 range, is my expectation. And then maybe even have a breakout to the next fib of 83, maybe in the next few months. Now, will that save my contracts down here for the January 2025s? I can't tell you. If we start getting big pops in these, I'll probably start closing out in 10% blocks for each target that we hit. But I'm very excited about the 95 price target for January of 2026. We got a lot of time. We got a year and a half for that target. And if we get there much earlier, the extrinsic and intrinsic value are going to look amazing. So I just think, again, I think this company is firing on all cylinders, just like Alex Chris has done with his previous businesses. And we're going to see that benefit them greatly in the quarters ahead. And this company, if they keep firing off like this and doing what they're doing, just because of their sheer size, if they get the ad business going, if Fastlane, since they're focused on margins with these, and they're focused more on higher margins than they are additional revenue, if they just keep that mentality, keep making the product more efficient, focus on PYUSD. I love the fact, I love the fact that she was pre-woke. It was 2003. My whole point is that the company is vastly different than what they were. Very, very woke. Again, there's narratives that come and go, and this company was definitely on the Disney train, right? They were on the Anheuser-Busch train of wokedom and focused on not the business, but controlling people and what they do. It was not a good look at all. Talking about freezing accounts for the Canadian truckers that are protesting, talking about them potentially, if their people are spreading falsehoods on social media, fining them. Like, that never happened, but the concept is so like 1984 dystopian. And that company is gone. All those people are gone. The leadership is gone. So they've gotten rid of one horrific narrative. Now the next one that needs to fall is this is a company that isn't growing anymore. And I think from what we saw today, with beats pretty much across the board, and you have to remember, these guys have a forward PE ratio of 14 now. It's just a baby. And so you could see 50% launch and just get into the 20s for the PE ratio. And that would just be a massive change in this stock. Sitting currently at 61 billion, but this thing could go a lot higher. Again, these guys have the ability to pull in 2 billion a quarter in the not too distant future, and net income. Even just with the buybacks alone, the upside pressure is going to be huge. And we've seen virtually no institutional ownership in this company. If we go back over here and we look at activity, like look at institutional ownership over the last, since 2020. 990 million shares down to 699. So not only has the share count dropped substantially, but then we've seen institutional ownership dropping alongside of it. So this is a formula to where if interest and positive narratives start to pick up, all while revenue just continues to chug along. Again, we're priced as 2017. So, and we're here, and we're looking at growth, and we're looking at actually the big boys and girls have control of this company now, and we're looking at operating expenses going down. We're looking at margins payment volumes going up. Margins are finally starting to increase for this company. And again, this is all heading in the right direction. Just look at operating leverage. This is finally doing what it should do. We're seeing expenses lowering while revenue is increasing, all while the share count is dropping, all while institutional ownership is going, should we take a look at PayPal again? Their monthly active accounts are picking up. Their transactions per account are picking up. This company is actually starting to get successful and has a real growth strategy. So I think that needs to be the focus on what you're thinking of with PayPal going forward, is the fact that this is a growing company. They do have a plan. And the stock is going to benefit from that. Currently up about 8% in pre-market. I expect us to, again, maybe I think this week at least start getting up to the 69 range and testing up there again. And this, when we look at the weekly trends here, again, we've got bullish divergence that starts in February of 2022, 2.5 years ago. This wants to pull us up to 112. The resistance for the 200 weekly moving average doesn't even start here in the months ahead till about the 120 range. I've got a 95 target on these January 2026s a year and a half from now. So I think a lot of money will be made back, especially if the narrative continues to change for the positive for this company. So focus on that. I will probably be doing a market recap today and tomorrow, and then at the end of the week, tomorrow especially, with the Fed talking about rates and making their decision for July. I don't expect rate cuts tomorrow, but I expect more positive wording. So, but after Wednesday, I'll be going on a vacation here for a little bit and doing some traveling with the kid and one of her friends and the wife. So I'll be out probably and maybe back Sunday. I might do like a weekend show, or again I'll just see you guys next Monday. But today and tomorrow you can expect a market recap. And thank you guys. If you could hit the like if you're still here, it's greatly appreciated. Throwing in comments at the end of the video helps out too in supporting it. But again, I will talk to you guys later. See you at 3 p.m. Have a great day. And I would definitely say buy the dip on this one, or you should have. You should have bought the dip on this one. But we're going to go out, I think, with that song. Peace out. Bye.
Lil Bubble, let me ride that rocket.
Buy that fucking dip. Yeah. Buy that fucking dip. Oh. Buy that fucking dip. Dump it on the top and spit. Buy that shit. Buy that fucking dip. Yeah. Buy that fucking dip. Yeah. When it drops, better cop. Let it fucking rip. People love the pump. Yeah. Got them lining up. Wow. See us winning, FOMO in and YOLO by the top. Dream of Lamborghini. Girlfriend in bikini. Front covered Forbes magazines where you'll see me. Oh, what? How? Price went down. Who will save us now? Felt like a hero. Now the fear is here and it's clear as steering to zero. Yeah. Hands weak, bags heavy, and I'm ready to forget about already all the hopes and the dreams. So puke your position like mom spaghetti. I'm hungry and got long cash on the ready to just buy that fucking dip. Yeah. Buy that fucking dip. Oh. Buy that fucking dip. Dump it on the top and spit. Buy that shit. Buy that fucking dip. Yeah. Buy that fucking dip. Yeah. When it drops, better cop. Let it fucking rip. When there's people crying, that's when I'll be buying. Yeah. When they tell you their investment conviction is dying. Oh no. But the market's dead. Yeah. That's what TV man said. It's time to sell it, walk away and sit in cash instead. Pump, what? Price go up. Guess that's just your luck. Sold at the bottom of ladder, you gotta learn how to hold on to whatever money you're gonna earn and not get shaken out when they run the stops. Although it tends to pretend to the dips and the bends, you know the trend is your friend all the way to the end. So I buy that fucking dip. Yeah. Buy that fucking dip. Oh. Buy that fucking dip. Dump it on the top and spit. Buy that shit. Buy that fucking dip. Yeah. Buy that fucking dip. Yeah. When it drops, better cop. Let it fucking rip. Buy that fucking dip. Yeah. Buy that fucking dip. Oh. Buy that fucking dip. Dump it on the top and spit. Buy that shit. Buy that fucking dip. Yeah. Buy that fucking dip. Yeah. When it drops, better cop. Let it fucking rip.